with us?
I don't see her as well. Let's just we.
And
I'm not.
I don't see it at the top saying that we are in YouTube.
Well, it
So
does. It
it does.
does.
Okay,
Yeah, yeah.
go
So
right.
good
Go.
afternoon. I'll go ahead and officially get started with the meeting. Good afternoon, everyone. Thank you and welcome. This is the general meeting for the Nabwic Investment Club. Today is December the 4th, and we are going to call this meeting officially to order at 6:44 p.m. Would anyone like to provide us with a blessing or a prayer this afternoon? Okay, I'll go ahead and state it. Father in heaven, Lord, we thank you so much for your blessing and for your grace and mercy in everything that we do. We thank you for your guidance and how you've guided us as women in the construction industry to gather together to build this investment club. We thank you for the guests who are here today. We thank you for everyone who's participated in this organization. And we pray that we continue to be obedient to your will with our finances and share our wisdom to others. It's in Jesus' name I pray. Amen. All right, we'll
Amen.
go ahead and get started with a roll call. Let's start with our current members.
Sharon Jackson.
Doretha Dennis.
Daniela Gillette.
Okay. Do we have any other members? I see we have Carolyn Modeste, myself, Nicole Allen, and I believe we have Ann McNeil. We're just going through the roll call. We have a guest, Daniela Gillette. Welcome, Daniela. Thank you for joining us. Are there any other guests who would like to introduce themselves?
Hi, this is Floria Smith. I joined November 21st.
Well, welcome, Floria. Thank you so much for joining us this afternoon. Okay. Any other guests? Okay, we do invite all guests to share their contact information in the chat so that we can stay connected with you and share any upcoming meetings that we have, whether it's our education committee meeting or our general meeting here this afternoon. All right, we'll go ahead and start with the motion for the approval of the agenda. The agenda has been shared to all members. We would like to call for a vote on
Nicole,
the, yes,
I am going to, this is Sharon Jackson. I'm
yes,
going to need to leave in the next 5 minutes.
okay,
So I do not have enough time to review all of mine. I just want to jump ahead and see if I could at
okay,
least get one update in
okay,
before you do the secretary's minutes, the treasurer's portfolio. Just let me jump in before you do reports.
okay. Can I get the approval of the agenda first?
Ann McNeil, motion to approve the agenda.
Can I get a second?
I second it.
Okay,
Doretha
it's been
Dennis.
motion and second. Any questions regarding the agenda?
No.
Okay, the motion has passed. Okay, so considering our president has another appointment, we're going to go ahead and move quickly to the review of our current portfolio. Please go ahead, Sharon.
Thank you so much. And let's see. I'm going to see if I have the ability. Okay, cannot share. So this is the deal. I am going to give an update on Charles Schwab. Charles Schwab, most people understand that it is a holding company. It engages in wealth and security. It had two primary segments. One is investor services. The other is advisory services. They have about 32,000 employees and is physically located, well, their primary hub is in Texas. They made an announcement, and you're going to see, well, if you did and looked at the SSG, we'll see that their expenses jumped dramatically this year, and that is because they purchased Forge Global. It's a market platform for privately held companies. They did that on November 6th of this year. So the whole point is to expand their services and expand their reach into the private sector. So the next thing I wanted to tell you about Schwab, I think I said we own 10 shares. They closed today at $95.03. For one day, that was a 1.11% increase. Morningstar says that even though their current value, they're selling at $95.03, their value, their true fair value is $109. They have a financial strength of A. They provide a dividend, a 1.15% dividend. They're 18. This is according to Value Line. Value Line says that their 18-month target price is anywhere between $75 and $151. Value Line also says that their 3 to 5 year target is 110 to 165. Their most recent Value Line report was just like 2 weeks ago on October 25th. Now, in looking at their quarterly sales for this year, there was a 4% increase between, 4% increase between the first quarter, Q1 and Q2, and then another 4% increase between Q2 and Q3. Now, in terms of Value Line for their forecasted sales, Value Line says that for the next 5 years, their forecasted sales should increase 7.5% and their EPS 6%. When you look at the SSG and you look at the sentiments, I went with, I did not do an SSG. I'm just going to tell you that now. But I looked at 12% for the sales increase for the next 5 years and an EPS increase of 8%. That is between Value Line and what the sentiments were of other BI members. Now, their PI is currently 22, which is about normal. Their 5 year averages is 23. So it's not really outside the normal range. All right. Now, in terms of it's basically a hold. When you go through it, it is basically a hold. When you look at it, the buy range seems a little low to me, but the buy range is between $70.60 to $90.05. Naturally, it is a hold. The upside down ratio is 2.3 to 1. The guide for BI is that you try and get a 3 to 1 or higher. That's considered attractive with a potential gain of 3 times. Theirs is a 2.3 to 1, and it is on a hold. So naturally, my recommendation is not for us to buy additional shares of Schwab. We're going to hold. The next thing is, I can get this in really quickly, is we own, I think, 3 share of Block. When you do the first page of Block on an SSG, it is nowhere near up straight and narrow. So naturally, I cannot recommend buying, but I don't know, I didn't do enough analysis to determine whether we should sell. I'll make a recommendation for that next time. But right now, definitely hold on both Schwab and Block. And that right now concludes my presentation because I really must leave. Okay, go to my next appointment.
Okay. Well, thank you so much for that, Sharon. Do you have time for a question or two or any comments from anyone?
Yeah, they're fast.
Okay. Okay. Well, I mean, it seems we don't have any questions at this time. So thank you so much for sharing the update.
Okay, thank you so much. I will, if it's posted, I will watch the whole meeting. later.
Okay,
Thank you.
perfect.
Bye-bye.
Thank you. All right, bye-bye. All right, so we are going to backtrack just a bit and get a update on the for the secretary's minutes. Doretha, would you like to share?
Yes. Good evening, everyone. Our minutes were sent out to all of the members, and so we just need an approval for them.
Well, I would like to make a motion for the approval of our meeting minutes. Can I get a second?
And McNeil, motion to approve. Since you're standing in the president, you can't make the motion, so Doretha can second the motion.
Okay.
Oh, I motion second.
Okay, it's been motion and second. Are there any questions? All right. All in favor?
Aye.
Aye.
Aye. Any opposed? Motion carries. All right. Carolyn, if you would like to share the treasury's report.
Uh, I'm going to share the treasurer's report along with the portfolio manager's report. Carolyn is in another situation where she cannot speak at this time. She's listening. So let me take a moment and stop sharing this particular platform and share what we call My iClub. My iClub is a platform where we track all of our, I think this may be it. We track all of our stocks. We put our reports there. And that is not it. Okay, give me just a second. And it gives us all sorts of financial reports. And so first I'll share just a couple of reports that Carolyn would normally share with us. And then I'll give the portfolio manager's report. Generally, she shares the unified report. And this is a copy of that. The valuation report is what I'm going to share. In this particular report, it has each of the shares that we own, the total number of shares that we own, and the gain and losses in this particular report. The cost, the market value, and the total cost of each share. This report is sent out to each of us, but we also each of us can log into this platform and find all of this information ourselves. That's the valuation report. Let me move on into the portfolio report. This shows the company size. Each of the each of the stocks and companies are divided up according to their sales, how big of a company it is, less than $1 billion, more than 10 billion, etc. We have small, medium, large, and mega. You can see that we own 1, 2, 3, 4 mega companies, greater than $200 billion. That's Facebook, Disney, CVS, and Amazon. We have 4 large companies, 6 medium companies, and 2 small companies, each of them with their own amount in sales. We also have something we call the heat map. Let me share that with you quickly. The heat map. This particular map shows different companies, and it is the larger the larger the box, the more members from the BI, the Better Investing membership. They do what we call an SSG on these particular companies, and they have an investment in these companies, and that's what you're seeing here. Not only are we invested in the companies, but there are members of the Better Investing platform who also have membership in these companies or an investment in these companies. Right now, we have $15,000 in total securities, part of our portfolio. We have $399 in cash and $21.14 as a unit value. Okay, Nicole, I think that is enough for, let me just show the sector and industry. Sharon likes for me to show this. It shows the different sectors and industry that each of these companies fall up under. We have consumer secular companies, financial companies, real estate. We have those in health and commercial services, energy, and technology. And this is how our pie graph looks for these particular companies. These are called the super sector, defense, sensitive. These are our sectors, as I just mentioned, energy, health, etc. And it shows how much of this sector that our companies fall into: 5% in real estate, 7% in financial. And then this particular pie graph shows our industries: entertainment, health, uh, internet, retail, home building, etc. And then this shows the companies and how they fall: small, medium, large, mega. Okay, and like I said, all of our members have access to this platform. It's called My iClub, and they can go into this platform and see what's going on with their company, the stocks that they are watching, and how much they're invested in a particular company. Okay, Nicole, that does it for the portfolio report and the treasurer's report all in one.
Thank you so much, Doretha, for that. I am going to request a motion for the approval of our treasurer and portfolio report. Would someone like to make a motion?
Ann McNeil motion to
Okay,
accept. Thank you.
all right. Can I get a second?
Nicole seconded.
Oh, I did? Oh, I can.
Yes.
Okay. It's a little confusing. Okay, so I'm seconding. Are there any questions? Can I call for the vote? All those in favor?
Aye.
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 Any opposed? All right, motion carries. Thank you. Okay, so let's see. What's the next item on the agenda? It looks like we're going to have a few updates of our portfolios. Are you able to share that screen again to see who's up for providing an update? We've already
Okay.
heard from Sharon.
Okay. Let me see quickly. I'm up first. I'll tell you that. I'm
Okay,
up
perfect.
first. So let me continue. This is not something that I'm going to share. It's just information I'm going to share. The first company that I have Amazon, I have Qualys, and I have Cactus. Okay. And so let me start with Qualys. The ticker symbol is QLYS. We currently have 5 shares of Qualys. The price today is $149.98. It is a small company. It is a leading provider in cloud-based IT, security, and compliance solutions. For the third quarter revenue, which the report came out September 30th of this year, for sales, $169.9 million. I think that's excellent for a small company. That's a 10% increase over last year's third quarter. They have a net income of $50 million, earnings per share, $1.82. Return on equity, 26.5%. That's really good. Debt to capital ratio, they have only a 10% debt in the company. That's also excellent. For their financial health grade, Morningstar gives them an A, Value Line gives them a B++. My recommendation for this company is to continue to hold the shares that we have. And after this after December and we move into January, oh my goodness, and we move into January, I'll take a look at perhaps buying a little bit more of this company because they've done very well. The next company I have is Cactus. The ticker is WHD. We own 20 shares. The price today is $46.08. It is a medium company, and they manufacture and service pressure control equipment for onshore, offshore oil and gas drilling, completion, and production. Um, I do know that over the last since our new administration came in January, there have been tariffs and there's been a lot of things going on with our international countries. So this company has lost some monies because of the tariffs, but they're still holding strong. For their quarterly revenue for the third quarter, um, they also they have an increase also. Their earnings per share is only 65 cents. Their return on equity 16%. Their debt to capital ratio only 5.6%. Very little debt. This company is waiting for ownership of a company called Baker Hughes. Baker Hughes operates over in outside the United States, but in the Middle East. But most of the company, this Middle East operation, they bring in about 85% of this company's revenue. So Cactus is in the process of bringing them on board. They're still waiting approval for parts of the company. Last summer, Cactus agreed to become the operator of this business, and the deal is still waiting to come through. I think it will close at the end of the year. My recommendation for this company too also is to hold and watch. We're going to be watching if how this play out with getting Baker Hughes. So Amazon is the last one that I have. The ticker is AMZN. I am sure everybody here knows Amazon and all of the different things that they do. The price today is $227.63. We own 10 shares of Amazon. They are the leading online retailer and marketplace for third-party sellers. Their focus is on cloud computing, storage, database, and advertising services. Most of these products bring in about 75% of this company's revenue. For this quarter, third quarter just closed, they're up 13% as opposed to last year. They made $180 billion in sales this last quarter. That's why they're one of those mega companies. Earnings per share, $1.95. Return on equity, 18%. Really good for a mega company. Um, Debt to capital ratio, it's kind of high, 42%, but they have a lot of different things that they're doing since technology has really come to the forefront. They have a lot of different things that they're purchasing, a lot of acquisitions on the table. So their debt to capital ratio is a little high. However, they still are making lots of money. Morningstar gives them an A, and Value Line gives them an A plus plus. I just finished reading an article on Yahoo Finance that they are considering dropping United States Postal Services. This is the company they use for a lot of shipping. They're getting ready to create their own postal service. So we'll see how this plays out with USPS, and see how this plays out for them. My recommendation is also a hold for this company. Just hold the 10 shares that we have with Amazon. And that's my report, Nicole. A lot of information, I know.
Yes, yes,
Mhm.
absolutely. Okay. Are there any questions or comments? Okay. All right. This is an open discussion, so if there are any questions, please let us know. Who's up on the next list to present?
Okay. Um, Anne is here, or you can go, Nicole.
Okay. Are you ready, Anne, or should I go?
You can go. I'll go last.
Okay, great. All right, so I am here to present or provide an update for three stocks: Lennar, Gildane, and Zolstis. And I'm just going to share some of the highlights regarding what I'm seeing in the market for these stocks. I don't know. Let me see if I'm able to share my screen. Are you?
Yes, you are.
Okay, good. Let's see if I can get this clicker to work. Um, no, it doesn't look like it's wanting to share. I can just, I'll share and then I'll play around and see if it's gonna give me an update. Okay, so the Lennar is the ticker for Lennar is LEN. Lennar is a residential construction, commercial residential construction stock. I'm not sure how many shares we currently own. Are you able to see that? I'm working with multiple screens here and I'm trying to navigate. How many shares of Lennar do we currently own?
10 shares.
Okay, so we currently own 10 shares of Lennar. Um, let's see. Right now, there's some research about, the market. And I think a lot of us have been seeing that if you're anywhere along pretty much in Atlantic, East Coast, West Coast, no matter what, there's a real big looming housing bubble. Right now, based on an SSG, the Lennar stock is priced at a sale, which has a target of about $96. Now, it's priced this way because there's an anticipation of at least 25% on the downside for this stock. And so they're kind of bracing for the anticipated changes in the market. That last third quarter of 2025, we did see a steep decline in the earnings per share price, which fell down to, I believe, a little less than $2 a share. And of course, there's some uncertainty in what's going on with the housing market, particularly around new homes. There is a there is somewhat of a looming backlog, although it's not as significant as they anticipated. Some new home sale prices are becoming discounted, and they're hoping that this will essentially spur more demand for housing. If you're in any metropolitan area like I am, you'll see homes staying on the market longer. You'll see maybe slower developments from some of the Lennar's competitors. And this is going around this is happening throughout the entire United States. So, although Lennar has a really good balance sheet, and they are reported to have more cash than debt, it is providing them a little bit of flexibility to sort of stay this market while there's some course correction in the need for more housing. So, given that it is recommended as a sell at this point, and fortunately, I still can't get this SSG to pop up. I think that in the next couple of weeks, particularly as we close out this holiday season and move towards the first quarter, we might want to reinvestigate Lennar to see whether or not it is a true sale at that time. So that's the update for Lennar. The second company I have is Gildane. And Gildane is activewear. So it's an apparel activewear. So your sweaters, I usually think of them as all of the stuff that you get branded, the t-shirts, sweatshirts, hoodies, things of that nature. I didn't really find any trending headlines or any surprises related to its earnings or any kind of shifts in the leadership or guidance from corporate. So right now, Gildane is looking pretty stable. It's mostly business as usual. There's no high uptick in sales, which we really didn't anticipate this late in the year. Usually you'll see some rising in the stock prices around March till maybe August area. But right now, there's no active reason that we could, either buy, sell, or hold Gildane. So we'll circle back and see whether or not some of those trends will start to emerge in early January, February. The next company is Zolstis. The ticker for Zolstis is ZTS. And Zolstis right now has a sharp decline as well. We're seeing nearly 25 to 30%. And it's mainly due to the weakness of the products that they sell. So Zolstis is a research pharmaceutical company that creates these antibodies, particularly around osteoarthritis and inflammatory diseases for pets. So I'm not sure if anybody has any pets, but the market right now is shifting as it relates to therapeutics and research surrounding canines and research in that area. One of the things that is a plus for Zolstis is they did get recent approval for their drugs in Europe. So you're starting to see a little bit of a global expansion for this company. They do have a presence in, where is it? Oh my God, outside of Europe. It's a smaller country. I can't remember the name. But there is some expansion for their antibody therapies, particularly for canines and felines who are struggling with osteoarthritis pain. So right now it's a hold. There again, even with this new approval, there's nothing significant in the leadership or in the way of growth that's giving it a buy. Some analysts recommend a selective buy, particularly if you're looking for long-term investments. But if you believe in pet care and pet therapy and recovery, it may be a good a stock for you. But right now, they're thinking it will bounce back, but it's kind of slow. So it's recommended as a hold. And those are the three companies that I have: Lennar, Zolstis, and Gildane. Are there any questions? Okay, no questions. All right, so we can move to the next studies that we need to update. Anne, is that you? Are you ready?
Nicole, I have a comment.
Yeah, sure, please.
Because we were in the process of selling our home and then we decided to wait. So I don't know if this is relevant or not when you mentioned Lennar. In 2008, homes values dropped like 30% and everything was going on. And our realtor was saying, it's like every 20 years something happens. So they're projecting like 2026, homes may drop in value. They're saying like 50%. So that might just be something we want to pay attention to since you are invested in Lennar. Just want
Yeah.
to say that.
Yeah, thank you. That is certainly, I mean, real estate is typically tend to be cyclical, a little bit more long term, but it's certainly cyclical right now. So that is a good insight. Thank you. Any other comments, suggestions, questions regarding any of the presentations? Okay. All right. So I'll turn it over to you, Anne.
Okay, thank you. All right, now let's see. I'll start with CBRE. Let's make sure we can see this. Can you see my screen?
Yes, we can.
Okay, perfect. All right, so the first company I have is CBRE. And I know this is, for those of you that's listening, whether you're on YouTube or you're live here with us, this is the Nabwic National Association of Black Women in Construction Investment Club meeting. This is for educational purposes only. We always want to keep saying that in case people are listening to us for any kind of stock tips or anything like that. We're not selling any stocks. We're not recommending any stocks. This is just for educational purposes only. And so I'm going to give my update, but I'm going to also share the screen because we're members of Better Investing, and you can go to betterinvesting.org. There's a free membership on the website at the very bottom for 90 days. And if you decide to become a member, it's probably less than $100. And we have an investment club inside of the National Association for Black Women in Construction. And if you're interested in becoming a member with us, we're going to put the link in the chat here. Nicole, somebody, if you could put that link in the chat in case anybody's interested in becoming a member. So I'm just going to walk through the company I have, but I'm going to share screen so you can see it. Better Investing has a lot of tools, and the tools that I'm using here on the site is called SSG, Stock Selection Guide. And so the company that I have is CBRE. And just give you a little information about the company. The company is a CBRE group provides a wide range of real estate services to owners, occupants, and investors worldwide, including leasing property and project management and capital markets advisory. CBRE's investment management arm manages over $140 billion for clients across diverse public and private real estate strategies. It is in the real estate sector, and it is in the real estate services industry. Interestingly enough, I went to a luncheon today at the Greater Miami Chamber of Commerce, the monthly luncheon on transportation. And I actually sat next to a lady who represented CBRE. So, of course, I got a card to make an appointment to see how we could work with her because I'm a contractor by profession. Okay, all right. So, as we can see here, the current price is $162 per share as of the 3rd of this month. I'm not going to go through a lot of this information. It's just quarterly and historical data. I'm going to go back to the SSG and talk about what I found in terms of the updates. Okay, this is the graph. As you can see, the visual for what's happening with the stock. I used a forecasted historical sales to project. I used 8%. And we have what's called sentiments. And sentiments is basically shows us what do the other members of Better Investing, when they analyze this stock, what did they say about it? The historical EPS projected at 16. And as you can see far to the right, and I'll just enlarge this a little bit, it goes out 5 years in terms of estimate. All right. As you can see, also projected, the pre-tax profit on sales is at 5.1%. Percentage return on equity is at 14.8%, and debt to capital is at 35.6%, going down just a little bit from the previous, and that's what the forecast is saying is going to happen. So we go over to valuation of this stock. This takes us and gives us a range of 5 years historical data for the price, the earnings, price-earnings ratio, the dividend payout, and the yield. And I would like to get down to the bottom, which basically, as you can see to the right-hand side, it says that this stock is basically a hold. Now, I don't know if there's any questions relative to this, because I do want to get to the next one, which is a recommendation to sell. Any questions about this particular stock before I go to the next one? Anybody? Nope. Okay. That's a no, right?
Right. No questions at this
Okay,
time.
perfect. Okay, the next stock I have here is CVS. And again, CVS, I like to use the research bar here at the top, which can give you from Better Investing Research. And on Tuesday, we do an education session for this club, the second Tuesday of every month. And I like to just go through this in the event that some of you may be listening, but you are not going to come back on Tuesday. So you can see to the far right, it will give you any information about this company. I'm just going to go through either company research. You can go to the company website. What are the analyst estimates? What's the company summaries? The filings and transcriptions, the financial statement, key statistics, and the price chart. Now, if I go back here, I'd like to go to Better Investing Magazine for this company, and it gives you any company you do an analysis on, it would give you information whether or not the organization has done any studies or any research on that particular company. I'm not going to go through that right now. I just wanted to just share the tool, but I'll go back to the SSG, as we call this, SSG, the Stock Selection Guide. And for the historical sales projected, I use the sentiments, which is 4.5. And for the historical EPS, I use 16. Now, even though I'm saying sentiments, I'm going to show you here, this is the sentiments bar. You click that, and it would give you all of the studies that have been done previously over a period of time on that particular stock. And I'm sharing this because I just want to make sure that individuals understand it's not about, we seldom have to pick up a pen or a pencil. All of the data is here, and the historical data that has been researched by thousands of volunteer hours is stored here. So you can choose any company and see historically what has been the sales that individuals have used projected, and it's here in the sales bar. What's been the EPS, and it's here. What's been the high PE is here. The EPS is here, the high price, low price, and so on. And this platform would actually do an average of these numbers, and that's what these numbers are here. Excuse me. And I elected to use these. You can do an average or whatever you want, as long as you have historical data to support whatever projection. And all these are projections, and it can be high, low within the EPS or the sales, whatever you choose. I chose to take a conservative approach to the numbers that I'm recommending in these evaluations. All right. So the high PE that I chose was at 13. The price based upon the high PE that I chose is at 13.6. Forecasted low is at 4.6. And I can go on and on, but I think if you look to the right in red, it says that we should look at selling this stock. All right, now let's go back to the research about this company. CVS is, and I'm not going to assume we all know what CVS is. CVS Health offers a diverse set of healthcare services. Its roots are in its retail pharmacy operations, where it operates over 9,000 stores, primarily in the US. CVS is also a large pharmacy benefit manager. It acquired through purchasing Caremark, processing about 2 billion adjusted claims annually. It operates a top-tier health insurer through which it serves about 27 million medical members. The acquisition of Oak Street Health adds primary care services to the mix, which could have significant synergies with all existing lines. It is in the healthcare sector, and the industry is considered as healthcare plans. And a lot of the data here, the current price, as we can see, is $75 annual dividend, which we like as we age, to invest in stocks with a dividend is 2.66. The yield is 3.55, 52-week high, 85, and 52-week low is at $53 per share. A lot of historical data here, current data also. But to go back to the SSG for CVS, we're looking at a sell. Now, so for the club, I'm going to suggest we move this to our next meeting to make a determination if we actually want to sell this company. Any questions so far before I move to the last one?
Where does it show how many shares you have? I'm not seeing that.
No, you're not going to see the shares on here. Doretha, can you share how many shares of CVS we have, please?
We have 21 shares of CVS.
Okay, thank you.
Okay.
I'm not sure if there's Floria. My screen is showing this SSG, so I'm not sure who asked the question.
That was me, Floria.
Okay, Floria, thank you so much for the question. Yes, so she said we only have 21 shares. So
I was
we
only going to comment because I have Scan, and in the last 2 years now, we have a card where we go to CVS to get they give us so much each quarter to spend at CVS. So I don't know if that's a positive or a negative regarding what's going on with them.
I don't know, but this platform is telling us to sell the stock because
Gotcha.
let's go back to the graph. As you can see here, the visual, right? You see the visual, right? The green is the sales. So they're making more sales, like with the card and all of that. But as you can also see in the pink, it's pre-tax profit. It is going down, down, down. And it's been going down now for too long. And then when you see right next to that, the earnings per share, which is here, it is also going down worse than the pre-tax profit. Okay, now this line shows us the price.
I can see that making sense too, because it's like Scan is giving us.
Right, but the money,
yeah.
As a part of the investment club, we use the benefits and values of this platform that we're using, and so it tells us what we should do with the stock.
Right. I'm agreeing with your chart. Just from what I see that's going on right now through the
So you can see from a visual, if you were to look at this stock just from a visual, you don't have to do what we just did. This is an investment education exercise that we're doing here as a part of Nabwic's investment club. And that's why I made the precursor by saying this is all educational, right? And it teaches us how to analyze our own personal stock or the stock of the club or any stock you find out, you hear about some hot tip and something like that. And you say, oh, let me buy that. Well, become a member of Bet Investing for less than $100 or whatever. It has a free membership right now on the website, and you can come here and just put the ticker symbol in, and in less than a minute, you have this graph.
Right.
Okay. It's for everybody, anybody. But I'm going to move on and do my last one, and then we're going to go ahead and wrap up. All right, everybody. So the last one is Disney. All right. And Disney and company information on Disney basically says that Disney operates in three global business segments: entertainment, sports, and experiences. Entertainment and experiences both benefit from the firm's ownership of iconic franchises and characters. Entertainment includes the ABC broadcast network, several cable television networks, and the Disney and Hulu streaming services. Within the segment, Disney also engages in movie and television production and distribution, with content licensed to movie theaters, other content providers, or increasingly kept in-house for use on Disney-owned streaming platforms and television networks. The sports segment houses the ESPN family of TV networks and streaming services. Experiences contains Disney theme parks, cruises, and vacation destinations, and also engages in merchandise licensing. The stock right now is at $105 per share. Dividend is at $1.50. The yield is at 142. 52-week high is at 124. 52-week low is at $80. All right. Let's go back to the I'll go back to here. Now, I used the sentiment numbers, and so historical sales average sentiment is basically at a 4, and I took a conservative. It was 4 plus something, but I took a conservative 4. The historical EPS average is at 3.2. Okay, and on the valuation side, right now, the high price is projected at 216 over the next 5 years. So forecasted low price is forecasted at 116. And this stock is projecting to be a buy. All right. Any questions, comments about Disney? If not, that's it for my updates on the stocks that I'm holding. Thank you.
Well, thank you so much for that. And let's move back to the agenda and see if there are any additional items that we needed to take care of.
Okay. Let me share the agenda quickly. Okay, the next item on the agenda, am I on mute?
No, we can hear
Okay.
you.
The next item on the agenda is the Stock Watchers report. We have 2 reports for tonight, and let me share this. Okay. Let me bring this over a little bit. Stock Watchers report. Fortinet and Nicole, that's you. And then Ann is going to give us a brief overview of Exos.
Okay.
These are 2 companies that we're watching each month to see if we may want to purchase them. So yes, go right
Okay.
ahead.
Okay. Let's see. I am going to try this again. I'll
Do
get
you need to
started.
share?
Oh, okay. Yep. Got it. Just needed to refresh a little bit. Okay. I am going to start with the presentation. Fortinet is the company that I will be discussing today. Its ticker symbol is FTNT. And a little bit about the company. It was established in 2000, so just a baby, 25 years ago, by two brothers, both who were heavy into technology and computers, and they built this company, and they've created a dynamic workforce. Fortinet is a cybersecurity and network security company. It basically designs, develop, and sells products and services to support digital infrastructure. It sells it to both government markets and private markets. And it has nearly 900,000 customers who utilize their services and products in one way or another. It does have a global customer base, so it's not just here in the United States, but of course it's in Asia and parts of Europe as well, and it's growing. One of the leading reasons it's growing is its patents. It has nearly 1,400, a little over 1,400 global patents on cyber security and technology. The second quarter earnings were close to $1.8 billion. So you can see definitely in the time that it's been established, it has been continuously building its growth. A little bit about them. It's very broad in terms of the different types of cyber and digital service products that it offers, and this is giving it a little bit of flexibility to move in the market in the way that some of its competitors may not. As of today, the closing price for Fortinet is $85.18. Based on this graph, you can see that there's been some slow trending. This is just a 1 day graph. So today has been a pretty decent market for it. It has a 52-week high of $114 and a low just around $70. So over the course of the year, it's not one of those shoot up to the sky, I'm rich the next week kind of company, but it's been creating slow and steady growth over the year. Fortinet has been a driving force in the evolution of cybersecurity and how it works in public and private systems. It delivers cybersecurity almost anywhere. And it does it with an idea of sustainability around technologies, including the security of information. And it has a diverse group of talented talented computer related programmers and technologists who've been able to kind of offer value at multiple access points throughout its integration in some of the programs. So, based on my analysis of the SSG, similar to what Ann was saying, I heavily use the sentiments in addition to some of the more prominent analysts who report through either Morningstar or through Yahoo or through Vanguard. The earnings per share and the estimated historical values. In this instance, most of the forecasted sales growth for this company is right around 12%, anywhere between 12 and 14%. So I landed and 12.5% over the next 5 years. It's estimated to grow in sales a little over $11 billion. And as you can see in the first graph, it's already reaching 1.7. The historical earnings per share is estimated around 13%. 13.8 is what I estimated. So we're looking at roughly $4.64 per share over the next 5 years. The graph doesn't traditionally demonstrate a very steep up, straight, and parallel, but more along the line of that steady, consistent growth. You're not going to see significant dips or significant spikes, but it does continue in a parallel manner that is fairly consistent since the 2015, since the beginning of this analysis. So again, it's closing price. It's a software infrastructure company, technology. It's considered medium. Morningstar gives it a grade of about a B at this moment. Let's see. Next one. So what's working? All right. So right now it has a very strong performance, given its recent financials in the third quarter. It grew almost 14% year to year, and about 18% in revenues. Their billings and their operating margins are all very healthy. It's also leading in a position in the growth market. They're ranked a leader, even though the growth isn't as aggressive as most of its competitors, mainly because of its flexibility in diversifying those product lines. They have over 50 different services and products. So, for example, they, in this particular one, the 2025 Gartner, see, I don't even know what that is, so I'm not going to mention it. But it has a blend of both technology, network, security, and I believe that gives it a little bit of a competitive edge. What they are doing now is transitioning, as most cybersecurity computer related companies, is this integration of AI. And it's aggressively looking at the AI security operations, which is SecOps, is an acronym that's now floating around. And it's centered around these cloud-based applications and how do they become more secure, because they're growing so fast and right now they're in such high demand. So that's going to be an area where they're a little bit ahead of the curve, or at least they're keeping up with some of those competitors who are thinking along the same line. It has reoccurring revenues. The subscription model that they have is giving them higher margins and reoccurring revenue. I don't know of many cybersecurity companies who are going to be able to have the type of margins that Fortinet has been reporting. And they have they have a very large market in cybersecurity. So the growth potential is pretty good for them right now, as well as the demand. So, what should investors watch or think about as it relates to any risk around this company? Well, historically, we know cyber technology based companies are very aggressive, right? They rise fast and they fall even faster. So you want to really kind of be aware of, that hardware and those large application based or hardware softwares and hardware products are sort of tapering off. Everything it's become cloud based. So that's one of the things that you kind of want to make sure that cybersecurities aren't reverting back to the old ways. And so some of the analysts are a bit worried regarding Fortinet's ability to kind of disassociate or completely break off from those hardware type of applications. Um, Competition is stiff, right? Cybersecurity in this network space, there's some very strong players, and almost any technology based company has some degree of cyber and network security that could be very good competitors. Another thing is transition. moving its business model from this hardware heavy to this whole cloud based subscription model is risky in itself. But I'm sure you guys have many software application subscriptions that you're subscribing to and unsubscribing to very frequently. So um, it's interesting to see how Fortinet is going to move in that space to ensure that the subscription models gives it some kind of stability. So why could it be a buy? And this is the output from the SSG based on the sentiments, based on the analysts. It recommends a buy anywhere between $68 a share upwards to $99. And keep in mind, it's about $85 now. So there's a little bit of more space to kind of dig in before you kind of pull that trigger. But right now, it's actually a buy. So if you believe in the future where security, cloud, and network coverage is going to be in demand and it's going to be robust, then this company might be one you want to take a look at. It's one of the strongest players in the room. It has some global reach, it has diversified staff, and it has forward thinking applications and integrations that puts it square on pace for this new hardware free type of cloud-based platform. The recent results in the management shows that they can execute. I know it can be difficult working with family, so but these two brothers have really created some synergy that really helps to build and grow a dynamic company. And so Fortinet is continuously innovating, especially in AI and cloud, and it could deliver some really solid returns over the next couple of years. So, final takeaways, it's a buy. We got the high price over the next 5 years. It's going to be upwards of $194. We think that the price, if it were to go down, is probably going to be around 68. The current price. The upside downside ratio is 7-1, which is really amazing. And you're looking at nearly 135% appreciation. So cybersecurity stocks do run hot, as all technology stocks do. So it may dip a little bit, but it's not going to be down forever. And if you're willing to ride that slow, consistent wave that it's been presenting over the last 15 years, this could be a really good one. Again, think about that subscription model and treat it as a long-term investment for your portfolio. You're not going to get those super high, 200% returns, but you'll get a steady, solid company that's going to outpace and hopefully innovate faster than some of its competitors. So that's all I have. Are there any questions?
So Nicole, what did you say your recommendation for this company is?
My recommendation would be to buy. We've been watching this company. Actually, when we first looked at it in June, I believe the price based on my SSG was around $96. So it's taking a little bit of a downturn, which really gives us a little bit more leverage. And given where I think it's positioned to grow, I think this is a good value for us. Of course, if we want to look at it a little bit longer, we can do that as well. But right now, my recommendation is a buy.
And I totally agree with you. I totally agree.
Any other questions? Are there any investors who currently hold this in their portfolio, have looked at this company, have any of its competitors in mind regarding, comparison of the technology? Any questions around that or suggestions, opinions?
No, so do we want to move this to take action on this now, or when we have our executive meeting so we can get with Carolyn and find out where we are financially before we make a buy decision?
Well, I know that the treasurers reported that we have a little over 399. I do want to see what Axios is. I do want to take caution to the allocation of our portfolio because I know we've got some really big technology, proportionately technology stocks that we might want to really think about lightening the load before we take on another. So I do recommend to buy, and that's something that we can take to our our executive meeting to see how we can reallocate. So that would be my recommendation.
Okay, I just want to pay respects to Eddie Edwards and Dr. V. Dunbar is here. And welcome. I know we've been talking a lot for over an hour now, over 90 minutes actually. And we want to welcome you for being here. And if you put your information in the chat, we just have one more update. And can you please, I put the links in the chat, the question, Mr. Edwards, that you asked. And Better Investing has a 90-day free membership, and a lot of what you've seen us do, you can go to the website. We will have a education meeting on Tuesday, the second Tuesday of every month on the same number. You can register for that. Thank you so much, Mr. Edwards, for joining us. Appreciate having you here. Okay, so Nicole, Sharon is back. Carolyn is still here. Not sure if either one of them want to say anything before we wrap up, and I give my last one, Valencia. Oh, Valencia, thank you so much. Thank you for your information. Felicia, Dr. V. Thank you, Dr. V. Okay, not Doretha, Sharon Jackson, I know you're back. Madam President, if you want to share anything. And Carolyn Modesk, I know you're here, but not able to speak. If you want to share anything, I'll do the last update on Axos. And then we can prepare to wrap up if there are no other questions. Nicole, anything else from you before I give this update on the SSG for this company?
No, I have no additional updates, and I did provide the promotions link to Better Investing. Hopefully, that'll take you directly to where you can look at obtaining that trial.
Okay, you put that in the chat for Mr. Edwards
I did.
Okay,
I did.
also, okay, we are live on YouTube, and I know when we started, Doretha was saying, oh, are we live? You can always look at the top right-hand corner and you can see it always streaming live. So all of the conversation that was being held, it was live. Even though I was not here, all of your conversations was live on YouTube. Just want to share that in case you had a question. All right. Okay, so the last update we have here is Axos, and this was a stock that's on our watch list, right, Doretha? We don't own this stock.
That's correct.
Okay, all right. So this is the visual, which is it is what we call the front side of the SSG, the stock selection guide, and it analyzes the growth and the quality of the company. That's what this does. It analyzes the growth and the quality. And again, I'll go back to the sentiments. I did use the sentiments to determine what numbers for sales, for the EPS, for the high PE, for the high EPS, for the high price, low EPS, low PE, low price. And those were the numbers that I used based upon the historical data that has been used by other clubs who've analyzed this same company. So I just like to give that. So for those who are listening, just so that you know, I wish I were that smart, but the tools says it all, it provides it all. And because it gives us thousands of hours of volunteer hours that have analyzed these stocks, we don't have to reinvent the wheel. So I just wanted to get that education in there. All right, so I chose For the historical sales, I chose 10.8. For the historical EPS, I chose 9.8. And as you can see the trend here, for the percent for the pre-tax profit on sales, forecast is at 50.7 percent increase. Is a lot. Return on equity, and this is a forecast in 5 years, is at 16.6. And as you can see, the difference between 25 and 5 years, the growth is steady. The percentage debt to capital, though, is increased phenomenally. And then the return on assets is at 1.72%. Let's go on what we call the backside, which is valuation. And the high price is expected to be at 146. The low price is expected based upon what I chose to put in as is at 48.5. And the buy, hold, sell range is suggesting that if we did have the stock, that we should hold it. All right. Now, let's go back to the company information. Give me a second here. And the research, I actually went to a couple of the other sites, but I'll just use this one from Better Investing. This company, okay, let's go read. Axos Financial Inc. is a bank holding company that operates through its bank subsidiary, BOFL Federal Bank, a nationwide bank that provides financing for single and multi-family residential properties, small to medium-sized businesses in certain sectors, and selected specialty finance receivables. Its operating segments are banking business segment and securities business segment. The bank distributed its products through a wide range of retail distribution channels, including only banking brands, affinity groups, and sales teams, among others. The majority of the bank's mortgage exposure is titled toward the state of California, particularly the southern region. Net interest income is a majority of the bank's revenue. The sector is financial services, and the industry is banks, and it's regional. The current price is at 84. No annual dividend, a yield. 52-week high is at 93. 52-week low is at 54. Related articles. And I did some, I went to the website and some other places, but these are some of the additional articles. I'm not going to go through a lot of these, but this in particular was a first cut that was done on this stock. And these are some samples of the PDFs of those analyses that were done. I'm going to stop there and ask if there are any questions. I just did a cursory since this was on our stock watch. And if we had it, we would hold it, but not sure if it's something that we really want to. Thank you so much for Dr. V for your comments, and I will read it. Thank you for this wonderful presentation and platform. I will spread the word. I'm currently investing in VC funds and crowdfunding. I have an active crowdfunding campaign. If the group is interested in hearing about alternative investing, I'm happy to come back and present on that topic. Thank you for all your leadership. And Dr. V, thank you for the question and the comment. As a part of Better Investing, we do stay within the parameters, and I guess you can see that based upon what you've seen so far. We do stay within the parameters of the Better Investing philosophy, and it is focused mostly on mostly on stocks. So, but then that does not prohibit individuals looking into other kinds of investing. So please make sure you put your information in the chat and we will follow up with you, because we are a part of the National Association of Black. Yes, that group, Nabwic. So you just never know. There may be others who are interested. And I say that because we have NAIC. That's a shirt I'm wearing today, which is Better Investing. But we also have NABWIC. And then sometimes the subconscious mind wants to put them together, which is what we are together. So any questions for me based up on the Axos Financials company? Oh, no? I think everybody's ready to go. That's what I think. All right, Madam Vice President, since the President has we'll turn it back over to Doretha. Thank you. Doretha, if you want to wrap us up, you and Nicole, thank you.
Well, thanks, Anne. I mean, it was a very informative presentation, so I do appreciate that. Well, we'll go through very quickly. It doesn't look like we have any old business to discuss. I did want to share that there is the upcoming annual meeting for the National Association of Black Women in Construction. It's going to be held January the 28th through the 30th in Dallas, Texas. And considering the investment club is a part of that organization, we'd like to extend a warm welcome to everyone who is interested in attending. There's also the annual Better Investing Conference, which is a huge event that offers training and educational opportunities for other better investing clubs around the country to come and work with one another to understand stocks a little bit more. So that's going to be in Chicago, Illinois in April of 2026. Are there any other open items that we need to discuss? Okay, hearing none. Well, we invite you all to attend our general meetings. It is held the first Thursday of every month at 6:30 p.m. here on Zoom, the same Zoom link. So if you can mark it on your calendar, it won't be the first Thursday in January because apparently that's the first. So we will be meeting the following Thursday for that. And then our education meetings are the second Tuesday at 7 a.m. Eastern Standard Time. You're welcome to come. We all share a little bit about what we're reading, what experiences we're having as we're growing in our understanding and knowledge of investing in stocks. So it's an open opportunity to come, like Dr. V, to share about the crowdfunding and other opportunities that may be interesting to our members. And then, of course, we have our executive meeting, which will be the third Tuesday of the month, that is open to our executive members. So, any questions? You had a question, Doretha? No, no questions. All right. Any further discussions before we move? Okay. Well, I'd like to have a motion to adjourn the meeting if we are ready.
Motion to adjourn, Ann McNeil.
Okay.
Seconded, Doretha Dennis.
All right. It's been motion and second, and we will call this meeting officially adjourned. Everyone have a great evening, and look forward to seeing you again soon.
Thank you.
Thank you.
Bye-bye.
Bye-bye.